This week, two commodity markets continue to face the full heat of geopolitical tension. It's time for our weekly recap of all the major developments. Hello, I am Rakesh Khanna. Welcome to this week commodity forecast, wherein we analyze what's driving commodity prices and what it signifies for traders in the segment. If you too regularly track geopolitical developments and their impact on commodities, then this video is a must watch for you. In today's video, copper and crude oil will again be in the spotlight. So stay tuned till the end for crucial support and resistance figure for both these commodities. Let's start with macroeconomic headlines. Crude oil price climb from a 6-week low amid uncertainty over US-Iran peace deal possibilities, with both seeking changes over the weekend to a draft agreement that would extend the ceasefire and open the Strait of Hormuz. Israel, meanwhile, increased its ground assault in Lebanon as Hezbollah stepped up attack in northern Israel. Trump said his proposed deal states clearly that Iran will not have nuclear weapons and Iran shall fully restore free passage of the strait. Global gold demand is softening amid tensions in the Middle East pressuring emerging market currencies and prompting tighter import curbs. In India, demand has collapsed sharply, down nearly 70% after the government more than doubled import duties earlier this month. Consumption fell to 7.5 tons in the fortnight end May 2027 versus 25 tons a year ago, as the effective tax burden surged to 18.45% from 9.18%, severely denting buying appetite. Sentimentally negative for jewelry players. Markets are likely to remain highly engaged amid a heavy slate of economic releases this week. Key indicators include the Manufacturing PMI and Services PMI data points accumulating in the US Non-Farm Payroll report, an important gauge of labor market strengthening. These data points will be critical in shaping rate expectation and broader risk sentiments. Parallelly, investor focus will remain firmly on US-Iran negotiations, as any meaningful progress or setback could have significant implications for global energy markets and geopolitical risk dynamics. The S&P 500 repeatedly reached new all-time highs, extending one of the longest winning streaks in recent years. The rally remained heavily concentrated in AI beneficiaries, particularly semiconductors, data center infrastructure, and cloud-related companies. US trade deficit narrowed in April as record exports of oil and petroleum helped offset a continued surge in imports of capital goods, key to the AI boom. The shortfall fell to $82.4 billion, with exports rising 4% and imports up by 1.9%. In April, the US exported a record volume of more than 6.4 mpbd. China's May rating docked China Manufacturing PMI 51.8, down 0.4 percentage points from April. Total new orders continue to expand more slowly. New export orders declined from April into contractions. Overall manufacturing expansion slowed, but underlying activity remained stable. Continued new orders and output support the sectors, and easing cost pressure helps profit prospects, while weaker external demand is a downside risk. Commodity focus. Copper. Copper consolidated at higher levels last week. After 3 successive weeks of gains, it eased last week on profit taking at higher levels. However, on the daily chart, it is trading above the short-term moving averages. The momentum indicator RSI is also rising, showing strength. A positive crossover may lead to a fresh upside. We expect copper to trade with positive bias in the medium term. It may find resistance at the previous swing high of rupees 1414 and strong resistance at the all-time high at rupees 1480. Support is seen at rupees 1325 and strong support at rupees 1290. A sustained close below the same may lead to a trend reversal. The price indicator is bullish. Commodity focus. Crude oil. Crude oil declined last week and fell by 9.57% week on week on closing basis. However, it has taken a strong support at 100-day exponential moving average towards the end of the week and failed to break the same. It has opened this week significantly higher, respecting the support at the long-term averages. The momentum indicator RSI is also now moving higher. If there is a positive crossover, we may see fresh buying momentum. We expect crude oil to trade with a positive bias in the medium term. It may find initial resistance at rupees 8,900 and strong resistance at rupees 9,170. Support is seen at rupees 8,450 and strong support below the previous week's low at rupees 8,200, which is also considered near the previous swing low on the contract chart. A breach below the same may lead to a trend reversal. The price indicator is bullish. Weekly price action. Gold rose by 0.68% week on week. Silver fell by 0.32% week on week. The gold-silver ratio fell by 1.96%. Base metals again remain flat this week. Weekly event calendar. This week, market will track S&P Global Eurozone Manufacturing PMI, Rating Doc China PMI Services, ADP employment change, initial jobless claim. That's your weekly commodity forecast from Mirae Asset Sharekhan. Do you think that a positive conclusion to the ongoing negotiations can bring relief to commodity market? Share your thoughts in the comments. To help you keep track of other markets development, all our research offerings are now available in one portal, the Mirae Asset Sharekhan Research Center. Explore research calls and detailed research reports across equity, mutual fund, future and options, commodities, ETFs, and more. Scan the QR code on the screen to kickstart your wealth creation journey backed by experts. Thank you for watching.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.